This is your boy Trillionaire Mac, and welcome back to another video. So in this video, we're going to be breaking down GBPUSD. Okay, we're going to be talking about my entry on it, why it was my entry, and where I'm looking to target. Okay, now this is going to be a little different than the previous videos that you guys have seen as it relates to Mac trades. Hopefully you guys are enjoying that, but I still want to make sure that we're focusing on the individual breakdowns of the trades as well. All right, so I didn't give you guys any type of point of interest to work with on GBPUSD on episode 1 or episode 2. Therefore, this trade I'm going to go ahead and break down for you guys so you all can go ahead and backtest yourself and apply these concepts to your own chart. So GBPUSD, to be honest with you guys, I've actually been having quite some time with GBPUSD. So if we're looking at the first point of interest here, okay, we missed this first point of interest by literally a few pips, and then price ran and hit our target, which was up here. Okay, then we had a second point of interest form somewhere else that I think price missed by a couple of pips as well, and also hit our target. This was our third point of interest. I did not speak about this publicly within my Telegram community, but I went over it with my students on our, I believe it was our Monday night webinar, maybe last week. And price tapped into this region. We're going to go down to the lower time frame and see what price did, and then price ran to the upside, but eventually came back and gave us the entry we were looking for. And now we're looking for price to target this region here for about 174 pips, only risking 13 pips, looking at collecting 13.39% return on investment. All right, so without further ado, if you're not subscribed to the YouTube channel, I would love to have you a part of the family. We're growing extremely quickly, and I have a lot of things in store for you guys within the year of 2022 as it relates to live streams, podcasts, the new series that is now out, which if you guys have not checked out the new series, episode 1 and episode 2, feel free to go check it out. Okay, episode 3 will be uploaded tomorrow as well, or anytime after this video. So feel free to check out episode 3, where we will be talking about the returns that came from episode 1 and episode 2. All right, so with that being said, let's go ahead and get into things. And if you're not subscribed, feel free to subscribe. If you haven't liked the video already, feel free to like the video before we get into it. I'll catch you guys. Let's get it. As always, we're going to get into the higher time frame, and we're going to break it down to the lower time frame. We're going to see what price is doing, all right, or how price reacted in this case, since we've already taken the trade. So let's first start on the H4 time frame and just see what's going on. So we can see that price is creating uptrend structure throughout this entire area. Okay, we have our, grab this, we have our higher high here, higher low. We have our tested highs all throughout this area here. Okay, we have multiple tested highs, multiple rejections, multiple failed reactions. Then price pushes to the downside. And then we finally have a break of this supply here and these failed reactions, giving us a break of structure to the upside. Whenever you have a break of structure to the upside, you want to ask yourself, what was responsible for that break of structure to the upside? Usually it's going to be some type of demand, right? So I refined my demand to this candle here. If you like to use order blocks, then you would have refined to this candle here. But, okay, students of mine, you guys understand exactly why this candle was my refinement, all right? Let's go ahead and break this down to the H2 time frame to see a little bit more information. So if we're looking at this candle here, okay, this is where I selected my point of interest for where demand came into the market to take out these failed reactions, give us this break of structure, and fail supply here with this nice push to the upside, right? Simply just set an alert to see when price would tap back into this region. And since this was based on the H4 time frame, you don't necessarily have to break this down to the H2 and then go to the M12. You can really just go from the H4 to the M15 if you guys understand how to correlate your time frames properly. All right, so I took my entry on the M15 time frame, or that's where I had my point of interest on the M15 time frame. Right, and let's go ahead and go down to the M15 time frame and see what price is doing. And students of mine, especially if you backtest a lot, okay, then this was an easy catch for you guys. Let's go ahead and remove this here. If you guys backtest a lot, this was definitely an easy catch for you guys, but if you don't, I want to encourage you to continue to backtest until you understand how these trades and things like that look. All right, so here we can see this was my first sweep of liquidity that I was looking at. Okay, it ended up being a break of structure to the downside, a complete solid break of structure to the downside. Let's go ahead and change that. So we have lows here. Okay, supply comes into the market with this last buy before the sell takes place. Okay, and then we have a lower low that forms here. Okay, then price trades up into our confluences to be solid and valid before I look to take an entry, right? So as you guys can see, price continues to push to the upside, right? It doesn't come back to this region here, but we do have a little area of imbalance, which is here, right? So we have this imbalance here. All right. Now, when it comes to imbalances within the market, I'm not always looking for imbalances, right? But if I see an imbalance above a demand region or below a supply region, it may be something that I'm going to pay attention to. And it's just instinctual, right? Like I really don't, mark out the fact that we have an imbalance here or anything like that, or inefficient pricing. And for those who don't understand what inefficient pricing is, so if you guys are looking at this bullish candle here, you can see that we have straight buys come into the market, right? The last sell that took place was here, okay, before the buyers came into the market. Now, imbalanced pricing is inefficient. But as you guys know, trading is a zero-sum game, right? Which means if it's a zero-sum game, there has to be efficiency within the market. Meaning, if you win, that means that you took money from someone else lost. If you lose, that means that someone took money from you, meaning someone else won, right? So it's a zero-sum game. And because it's a zero-sum game, price has to be efficient, okay? And the areas where it is inefficient, more than likely price will eventually, whenever it's ready, come back to balance out that region or area, okay, of inefficiency. So in this case here, we do see that we have this, okay? Now, like I said before, it's not really something I pay attention to, but in this case here, it wasn't bad confluence, right? And when I do pay attention to it, like I also said before, it's really just a habit. Like I don't actually mark this out, but I do get a lot of questions about inefficient pricing. And this was a fantastic example to actually show you guys. So I figured I would mark this up on the chart. So let's just go ahead and extend this out just a little bit. Okay. So what I want you guys to do is whenever you have your entry confluences take place, I want you to keep your entry, okay, or your entry area in mind no matter what price is doing. Okay, so no matter what price does, so as we can see, even with GBPUSD, right, this is our entry here, okay, because this was the demand that was responsible for flipping supply here. If we're looking at price ran over 170 pips. It ran over 170 pips, but I still had my buy limit set here. Why did I have my buy limit set here? And it, you could look at this as a little risky, but I'm also going to show you guys something on lower time frames that will give you a little bit more of a peace of mind when it comes to these types of trades, okay? Especially GBPUSD, Euro JPY, GBP JPY, pairs that move, a lot of volume and, are very sporadic when volume is placed into the market with those pairs. Usually you will have something like this. So for example, I'm not going to go to Euro JPY because this is a GBPUSD trade breakdown, but for those of you that are within the Telegram community, link is in the description. You guys know we had a very, very similar example to this, I want to say maybe 2 weeks ago, where price completely ran away from our point of interest and then came right back to it, gave us an entry, and then continued to push the opposite direction, which is what we were anticipating. All right. Now, if you want to know how I apply all of this information, and if you want a breakdown of all of this information, feel free to check out the institutional trading course or join the mentorship program. Right? My job is to assist you with improving your efficiency and effectiveness on the charts, and that is what I'm here to do. Right? So once price eventually comes back to this area, okay, we can see that we have a little bit of consolidation here with inefficient pricing. Okay, essentially that means that price was essentially balancing itself out in this case, right? Closing this inefficiency. But also, we can see that it taps right into our entry, which was the demand that was responsible for flipping supply, as well as giving us our other confluences over here after our sweep of liquidity, breaking structure to the downside. And we can see that price literally taps into this region and then pushes to the upside. Now, I know what you guys are saying. Matt, there's no way you caught this trade. There's no way you're in the market. There's no way, after 7 days, you left this open. Well, that is where I want to show you guys this here. So this is what I posted on my Instagram story. You guys can feel free to check into my Instagram story. Follow me on Instagram @TrillionaireMac. And if you you leave a comment or something like that on one of my pictures telling me you're from YouTube, I'll give you a follow back and I'll shout you out. All right, just expect followers to follow you. All right, so feel free to follow me on Instagram where I drop my trades and things like that. But as you guys can see, if we are, let's go back here and let's actually mark up with a horizontal line. Let's mark up this here. Now, even though I do analyze on TradingView, okay, I want you guys to be sure that you are still paying attention to your individual trading server on your MetaTrader 4, because sometimes the entries can be slightly different based on supply and demand, based on liquidity sweeps, based on your market structure and things like that. And you always want to pay attention to the server that you are trading. Okay, it's going to be important that you guys do that. If I were to just blindly, set these numbers here based on the Awanda server, it may be completely different from my actual broker, right? So as you guys can see, the entry on my actual broker was 35747. The entry on MetaTrader, or excuse me, the entry on TradingView was 35744. So it was, 3 pipettes off, okay? But that is why I pay attention to my actual broker as well, okay? So as you guys can see, here was my entry. I screenshotted off the H1. You guys know I don't use the H1 at all. I may glance at the H1 if I have to make a refinement, but I usually don't use the H1. I usually like to use the H2 as my lowest time frame. And then my M90 you guys see up here, it's only there because I use the M90 in confluence with a higher time frame, daily and above, in order to take possible entries on maybe a position style trade or a higher time frame swing trade, right? So this is my entry here. The broker that I use has excellent spread as it relates to major currency pairs. If you would like to be a part of that broker, feel free to click the link in the description as it relates to KOT Forex. All right. I do get a lot of questions about what broker do I use. That is the unregulated broker that I use, KOT Forex, and I also have a hedge broker. But unless you have a large amount of capital, you really don't have to worry about hedge brokers right now. But once you guys do, as you guys continue to withdraw from the markets and things like that, and you have a certain amount of capital, you may want to look into a hedge broker, especially if you are depositing your FTMO funds, and things like that. All right. So this was my entry. With this screenshot, I believe we were up around 5 or 6%. I can't even remember. This was like 5:30 in the morning, something like that. And currently, if we see where price is, we're currently up around 4.84%, but it doesn't really matter because this trade is already risk-free. So I've already closed 1 R of this trade. Remember, anytime I'm up 4%, I'm always going to close my risk. Okay, it's just what I like to do. And of course, our target is going to be our higher time frame zone, which is right up here. Okay, so we're seeing 13 pips for around 174 pips. Really, that doesn't matter. What matters is the percentage return. So I risk 1% of my account on this trade, and we're looking for about 13.39% return on investment. When you are trading the information within the institutional trading course, this is the type of accuracy you could be expecting. So let's go down and look to see how much drawdown we actually had, because I know you guys like to see things like that. You get a lot of questions about, hey Mac, what's your average drawdown? Things like that. What's my average stop loss? So we had about 1.1 pips of drawdown, which I actually needed. I actually needed that 1.1 pip of drawdown because of spread, okay, within the broker that I trade. Now, if we're looking at current price, okay, we're seeing that price. So we tapped down into this region, we swept this liquidity, and then we had a nice break of structure to the upside. So even though price is retracing right now, I'm not too worried about it. We may consolidate until tomorrow London session, but like I said, I'm not really worried about it. And let's also talk about this stop loss. So this stop loss was actually pretty large for me. I'm not gonna lie to you guys. I usually trade with a smaller stop loss than this, but you got to trade what price gives you. And usually with GBPUSD, well, usually with GBP pairs in general, usually the stop loss is going to be a little larger, but it's all going to be relative, right? Because before price tapped into this region, it ran 174 pips, right? And we're looking to close about 174 pips, right? So it's all relative. Even though the stop loss is a little larger, you're still going to get your percentage return off of the trade, all right? So with that being said, hope you guys enjoyed this breakdown. We haven't hit target just yet, but I want you guys to go ahead and set this up on your chart as it relates to this here. Let's go ahead and show All right, so feel free to set this up on your chart, and then the coming days and the coming weeks, just see how price continues to push to the upside, tap into this region here. All right. With that being said, I'll catch you guys on the next video. Hope you guys enjoyed this one, and feel free to look forward towards episode 3 of Mac Trades, where we'll be going over this week's results as it relates to the points of interest that were given earlier in the week. All right. And for those of you who missed the first and second episode of Mac Trades, make sure you're on. Make sure you've subscribed to the channel and make sure you have your post notifications turned on. So when I upload those videos at the beginning of the week, whether it be Monday, Tuesday, and Wednesday, as our trades begin to take place, I want you guys to be sure that you're taking your own entries at my points of interest so you can profit. All right. So be on the lookout for those points of interest to release in the earlier part of the week, and I'll catch you guys. All right. With that being said, much love. Peace out.